JP Morgan Chase has been working on deals to cut capital charges on about $25 billion of its corporate and consumer loans. U.S. banks have found a new way to unload risk as they scramble to adapt to tighter regulations and rising interest rates using so-called synthetic risk transfers. Now, this gives banks a way of deleveraging their balance sheet by transferring the risk of a tranche of a loan portfolio to an investor in such a way that they obtain regulatory capital relief.
I assume no risk finished products myself, Mark.
Okay. So let me get this straight. The bank calls you up. They give you the bonds they want to sell. They give you clients. They give you money to run your business. They give you fat fees for doing so. But you represent the investors? Is that right?
Yeah. But we're not in the Merrill Lynch building.
Okay. Where are
We're in
you?
New Jersey.
You're 20 minutes away.
Well, 5 Visa helicopter.
Okay.
It's funny, huh?
That's hilarious.
Oh boy. Your boss is about to explode.
No, he's too curious to explode.
Hold on. Say that again. CDO A has parts of CDO B, and CDO B has parts of CDO A, but then they both get put inside CDO C.
Yeah, that one's called CDO squared. CDO of a CDO. All right? And then there's CDOs made up of the opposite side of the bet you make with your swaps. We call them synthetic CDOs.
What did you Synthetic CDOs.
Synthetic CDOs.
That is fucking crazy.
It's not. It's awesome.
What is going on, guys? Lottery Socks here. Welcome back to the channel. Welcome to the channel if you're new. Today we have a lot of stuff to cover with AMC before the earnings comes out. You just saw what's happening with banks. It's a whole lot of bullshit, but they are running out of loopholes, strategies, and places to park fake shares. Overall, all I ask in return before we start the video is for you guys to hit that like button, engage the video in any way possible, have post notifications on. Let's get into the video. It's been a while. Our baby XRP correlates to AMC. If you have not watched my channel, and if you're a new subscriber or a new viewer, AMC and XRP track each other. As you can see right here, AMC is overlaid over XRP and the charts are very, very similar. Well, I'm going to remove AMC right here and show you guys exactly what I'm looking at and what I'm excited about. XRP is about to enter this point of interest that we have drawn out. The point of interest that we have had drawn out is from November 12th all the way to December 17th, about a 1 month time frame for XRP to either go very bullish or very bearish. In other words, aim for that all-time high or aim for that all-time low. Now, this is based off of cycles and technical analysis, and I want to say, as of right now, it is looking bullish, but I don't want to speak too soon. Another thing to note, AMC is sitting in its point of interest, but XRP could be playing out before AMC, and we may have started this cycle a little bit too early. AMC, from its low to where it recently peaked at, has been up about 62%, and XRP up about 72% from the low to its peak. And I'm looking at the bottom wick down here. As of right now, XRP is currently up around 60% from that low, testing resistance at this trend line, as AMC is doing sort of the same, fighting a resistance level, but we do have earnings tonight. Now, it's been a while since we brought it up or even taken a look at it, but Ethereum Classic. As you can see right now, the chart of Ethereum Classic and AMC are overlaid over each other, and Ethereum Classic tracks better with AMC than XRP, believe it or not, but all three of them very, very in tandem with each other. With that being said, I think Ethereum Classic adds on to the bull case scenario, and we're going to talk about it right now, real quick. Bringing in the drawings, I have not touched the cycles on this in such a long time, but it just so happens that we are entering the Ethereum Classic point of interest, just like XRP and AMC, all at the same exact time. You can see right here with these cycles drawn out, XRP starting to scale up, and you are seeing it start to scale up. With that being said, the last times XRP did this, you can see back here, major move and then major move back in June of 2021. Moving on, why earnings may disappoint. This is already the articles that are being pushed out on AMC before the earnings tonight. Again, AMC 1 hour after market close, 5 p.m. Eastern Standard, has earnings coming out. They may be onto something just because the Taylor Swift numbers are not going into Q3, I believe, so be careful trading earnings. If you are trading earnings, I think it's too risky to play, and the only reason I say that is because AMC is likely to beat expectations. We all know it. Everybody knows it, which means shorts on the other side, market makers, hedge funds, institutions, they're going to say it's likely retail is going to bet calls because this is the likely scenario, which makes me think that they are just going to dump it. With that being said, it's a 50-50 shot and it's way too risky to play earnings, in my opinion. Not financial advice. I'm not a financial advisor. AMC has 2.4 million shares available to borrow, 11,000 calls compared to 8,000 puts expiring in the money, and we are more bullish on the options chain for this week, next week, and then the weeks to come as well. So if we do go nasty green green over the next few weeks with these point of interest with the SPY ripping, then you could see a nice gamma ramp start to build up. Yesterday, short exempts dropped a bit, coming down from 216 to 113,000, so they cut them in half exactly, but still pretty high. AMC also had another order imbalance on the buy side of 107,765 shares that they could not match to sellers. And also, Matt Rife, I love this guy, comedian, may be partnering with AMC, so this gets me hyped. Aside from all the DD that we look at, I really hope this happens. And Dane Cook may be moving forward with Adam Aaron. So just another few good things for AMC fundamental wise. GameStop, 1.6 million shares available to borrow, 2,000 calls compared to 2,000 puts expiring in the money. Nothing really happening on GameStop. Short exempts stacked up, volume low. Overall chart sitting at $13.50, down 1.1%. Trying to hold this support right around $13.40. Once we break below that, again, still waiting for that $10.10 level. Especially if AMC goes red, GameStop's going to get that sympathy move down. But either way, I still think GameStop is lagging behind the sell-off that AMC had. Now, before we get into the S&P 500 and some additional stuff to close out the video, make sure to get in the Discord. The link is right under the video. I'm in there on the daily. We talk stocks all day long. Plus, we have options trading alerts in there. We post gains, post losses, and more. And you can copy my trades with a click of a button if you follow me on Frenetically, which is like the fourth link under the description. So make sure to join the Discord and then follow me on Frenetically. Also, guys, if you want up to 16 free stocks and having your uninvested cash in Moomoo earn 5%, use my link, sign up for Moomoo, and make a deposit of any amount. It can literally be $1, and you will start earning benefits from there. So it takes 2 minutes out of your day. Go do that. Both of those links are in the top of the description and pinned in the top comments. Plus, you're getting a ton of other benefits like free level 2 order book data, access to trading options, going long, going short, and a customizable earnings calendar. Touching on the S&P 500, trading at 436.64, slightly red on the day, kind of getting a hammer candle. We had this nasty pop. A lot of people were expecting a retracement, a sell-off, which these big players, they know you are expecting that. So what's happening here is they could just be consolidating it before having it sell off so that it just doesn't come straight up and then straight down. They want more liquidity to pour into the market. Overall, volume is slowly starting to deteriorate at this level. We did enter this supply zone, which I expected a retracement a little bit before, but especially in this zone. I said in yesterday's video, I don't think we are just going to break straight through it. It is a possibility, but it doesn't look like that's going to be the case. Overall, first retracement, 431.25 and then 422.65. And at that level, I would be looking for a re-entry into calls on the SPY. Couple extra things to close out the video. I'm happy Robinhood actually missed earnings. Not really a surprise here. Screw Robinhood. They like to rob retail investors. Hundreds of billions in unrealized losses for banks. Central banks worldwide are absorbing tens of billions of losses from QE. And a friendly reminder that all the assets belonging to the 5 banks that failed in 2023 eclipse all of the bank failures during the global financial crisis of 2008, or said it another way, in only 8 months of 2023, 5 banks have failed more spectacularly than 168 banks did over 3 years during that time period. The 5 failed banks in 2023 held 16 million more assets than the 168 banks that failed during 07 to 09. So if you think this bank crisis isn't that large, think again. Banks are not doing well. We started with banks, we ended with banks. That is what I got for you guys for today's video. Hopefully you enjoyed watching or found value out of the video. If you want to talk about earnings on AMC tonight, get in the Discord. I love you all. Lottery Socks out.